I'm Justin Boyd, President of Delta Financial Advisory, a registered investment advisor and fiduciary to our clients. Welcome to our new video series called The Speculative Allocation. This series is intended to provide additional visibility into our investment decision-making process for viewers who think Delta Financial Advisory may be a good fit for them. If you find value from today's content, please like this video and subscribe to our channel. If you'd like to learn more about Delta Financial Advisory, complete the contact request page found at deltafinancialadvisory.com or click the link in the description of this video. Okay, we'll have a quick legal disclaimer and then get started. I hope you enjoy.
This video is for entertainment and educational purposes only. It does not constitute financial advice or investment recommendations. Delta Financial Advisory, its clients, or its representatives may hold positions in the securities or assets discussed. This video is not an offer or solicitation for any securities or financial products.
Few things in the investment world have been more polarizing in recent years than Bitcoin. While we appreciate the often passionate views surrounding Bitcoin, we try to avoid this behavior in favor of a simpler approach. When in doubt, focus on protecting client capital and, at all times, conduct solid fundamental research and combine it with proven technical work. Exercise patience and then enter positions if and only if we think the likelihood of success is materially in our favor. We don't try to overcomplicate things. For today's speculative allocation, we'll look at Bitcoin, as we think it currently sits at a particularly critical juncture to determine future price trajectory. I want to say upfront and foremost, we believe Bitcoin is far and away the leader of a viable and sustainable emerging asset class. We think the analogy of digital gold is also appropriate due to the underlying code and widespread acceptance of Bitcoin. We incorporate positions in Bitcoin for clients who are comfortable with the risk. Today's video is strictly surrounding current technicals, nothing more, nothing less. We appreciate the optimism that can be constructed using log scale charts for Bitcoin. However, we think linear scale is more appropriate at present for a variety of reasons. So that's where we'll focus our discussion surrounding price levels and targets today. Please note, the yellow chart work represents linear scale, while the blue chart work represents log scale. This is very important to remember as we view the charts. So again, ensure to view the yellow trend and support lines in our video today. Large price gains saw Bitcoin climb from around 12,000 in mid-2020 to almost 70,000 by late 2021, identified by the large blue arrow shown in the chart. By mid-2022, it was back below 20,000 before a second incredible bull run that tested 125,000 within the last month, shown by the vertical orange arrow in our chart. In short, we believe that the test of 125,000 last month was the completion of a follow-on and proportionate move to the original and larger movement experienced in 2021. Bitcoin now sits at an absolutely critical support level of approximately 108,000. From a bullish perspective, it's still above a secondary rising trend line and has a support level around the 108 level that was previous resistance. It also appears that more recent price action could simply be new consolidation prior to another breakout higher. Where our concerns arise are declining magnitude of gains on each successive rise, while at the same time, critical momentum indicators suggest divergence versus continued price increases. Additionally, in the prior large cycle, and as is common with momentum indicators, large price declines often don't occur until readings go below zero or below the overbought or oversold conditions if referencing relative strength. Zooming in, we also observe a particularly bearish chart pattern known as the Three Crows, which just presented itself on a daily chart last week, shown here in the circled area on the right side of the chart. Considering all else we've discussed surrounding current positioning, we paid particular attention to this. Given that it's entirely possible we are in the late stages of the broader current economic cycle, combined with this chart work, we would suggest considerable caution as the risk-reward ratio does not seem overly favorable in our opinion. What do I mean by this, or how do we approach this for client portfolios? The majority of our clients have considerable tax implications. So we would encourage profit-taking in retirement accounts while maintaining a foundational, perhaps smaller position in taxable accounts, which is intended to be the truly long-term holding, avoiding any frequent tax implications. This allows a layered approach where we avoid frenetic short-term actions, but maximize tax strategy for higher marginal rate payers. Simply put, we would suggest considerable restraint in Bitcoin allocations at this time, as we see potential for significant downside. The good news is we expect significant technical clarification within the next couple months. As always, we wish everyone health, happiness, and successful investing.